Good day, everybody. It's Sam King here, and welcome back to today's class. Now, in today's class, we're going to be treating something that a lot of people actually struggle with, which is why your order blocks fail. Now, this video is going to teach you where to look for your order blocks, the zones where you can actually mark out your key levels for your buys and your sell setups. Now, let's get straight to it. There is not much time to actually waste. Now, the topic for today is why. Okay, let me put it up. Why your order block fails. Now, disclaimer: this video does not promise 100% win rate or 100% always hits for order blocks. Rather, it will actually teach you to how to precisely mark your order blocks more and get a higher win rate on your order blocks. Now, the more you study, the more you look, the more you actually see. That's the thing with technical analysis. That's the thing with the and that's the thing with trading. So, like, let's go to the chase and get straight to it. Now, one of the reasons why your order block fails is actually because you're either trying to like one of the reasons why your order block fails is because you are trying to either buy from the wrong place or sell from the wrong place. Now, order blocks are literally everywhere you look. Now, there's a simple template to order blocks, which almost everybody knows. Now, there are a lot of ways to actually mark out your order block. One of the most common ways to mark out an order block is the bullish engulfing or the bearish engulfing candle. Let me use let me use as an example. Let me use an example. Okay, not the black one. Wait. Now, this is one of the simplest ways to actually mark out another block. Where you have a bullish candle or a bearish candle, a bullish candle, then a bearish candle that actually engulfs the bullish candle. Now, let me look for a typical example of what I just illustrated, and we have something like this. This is what I just drew over there. This is a bullish candle and a bearish candle that actually engulfed it. Now, this is another block. To mark this out, you mark out this blue candle from top to the bottom, then you draw it out like this. This is our other block. Now, this video is not a crash course or a beginner's course to actually mark out other block. Rather, it's to show you where to mark out your other blocks so you know where to actually buy and where to sell. Now, one of the main reasons why your order block fails, like I said earlier, is because you're trying to buy from the wrong place or you're trying to sell from the wrong place. Now, to know where to buy or where to sell from, you need to have an understanding of what we call the premium and the discount pricing. Let me give you an illustration. This is bullish trend. This is a bullish trend. This is a bullish trend. Now, where you find your premium and discounts, a premium place is premium and discounts is originally an economic term. It's an economics term. So like premium means when the price of something is at the highest, when the price of something is expensive. While discounts means where the price of something is actually cheap. So like discounts where you have the price cheaper, and premium where you have the price at an expensive price at an expensive rate. Now, realistically speaking, what you do at discount zones is that you buy at discount zones so you can sell at premium zones. That's how you make profits. Okay. So you buy at discount zones so you can sell at premium zone. Now, that is a basic or a layman explanation of what premium and discount is. In economics, now coming to the charts, we have, like I said, a premium and a discount zone. I'm using this range for an example. I'm trying to like rush things over because this video is trying to like put together a lot of things. Premium and discounts, where to actually mark out your order blocks and things to look out for. When marking out your key levels or your POIs. Now, this is a bullish example. Let me put a break of structure here. This is a break of structure. That's a break of structure. Now we have our swing low, our swing high, and our break of structure. Hence, this is a bullish range. Hence, this is a bullish range. Okay, now I said this is a let me put it back. This is a bullish range. Now, how do you know where your premium is? How do you know where your discount is? Now, how to easily identify your premium or your discount is either use your Fibonacci retracement tool and you set it like this. Now, your Fibonacci retracement tool does not come by default like this. There are actually lots of numbers. There are actually lots of numbers, but to get this setting, just come here and you can actually pause. You can pause the video here to get the setting, or pause the video, take a screenshot, then get the setting and save it as a template. And once you are done, this is not the only way to actually use a Fibonacci retracement. You just come here and you save as you save the templates. I already have mine saved. So this is how you can easily mark out a premium and a discount zone. Now, this zone below here is the discount zone. This zone above here is the premium zone. What's that? Um, you mark this out. This zone from here, from this 50% to this 0% is your premium zone. From this 100% to this 50% is your discount zone. Now, basically what this means is that you want to look for buy opportunities here. You want to look for buy opportunities here, and you want to look for sell opportunities here. You want to look for sell opportunities here. Now, why your order block fails is the fact that you are trying to like buy from here, where you see another block candle here, you see another block probably somewhere here, or somewhere around here, and are trying to buy or join the trend. Whereas the actual range price has not come back to tap into the discount zone before moving. Now, when you see something like this, when you see a break of structure to the upside, what we expect price to do is for price to actually come back down into this zone, into this discounted zone, and then start moving up. Now, usually price comes back to do quite a few things. Price might actually come down to clear liquidity. That's another topic for another day. Now, if you have questions about liquidity, go to my Twitter page and check the pin post. It has everything you need to know about liquidity. Then you might probably come back to this video to continue. Now, like I said, when you see a bullish expansion like this, when you see a bullish break of structure, we expect price to come back down into the discount zone before continuing the trend or probably creating another break of structure. After you see another break of structure here, this becomes a new range. That's how ranges are formed. This becomes a new range where you have your discount here and your premium up here. Now the cycle just keeps continuing over and over and over and over and over again. Now, why your order blocks fail is the fact that you are trying to get a bullish order block in a premium zone, or you're trying to get a bearish order block in a discount zone. Now, to actually, I just explained the discount zone. Let me flip this invert scale and explain the premium zone. Now, it's pretty much the same thing. One thing you need to put into consideration is that whether you are bullish or you are bearish, your premium and your discount zone always remains the same. Now, what do I mean by that? Whether you are bullish or bearish, this is a bearish trend. Your premium is always above and your discount is always below. Just on your chart, once you open your chart like this, once you open your chart like this, have it in mind that your premium is here, your premium is above, premium is above, and your discount, your discount is below. So whether you are bearish, whether you are bullish, whether you are on an uptrend or a downtrend, your premium is always above and your discount is always below. Now, like I said earlier, in a bullish trend, we expect price to come back down into the discount zone before continuing. Now, in a bearish trend, when you see a bearish expansion, when you see a bearish break of structure to the downside, we expect price to actually come back into this premium zone and either clears the liquidity, tap into a nearer POI, then start dumping. Now, you might be making the mistake of trying to see another block here, you see another block here, you see another block here, then you want to sell. Price has not actually fulfilled its duty of coming back into the premium zone. Until price actually comes back here, it is not safe to actually sell from any of these places. Now, one of the places that actually safe to sell from is probably when you see a POI here, probably a fair value gap, a breaker block, a mitigation block, any of those POIs, or your order block, your unmitigated order block, or your unmitigated order block. Then you see another block like this, the price comes in here, tap into it, and starts moving to the downside. Now that we've gotten that out of the way, let me show you real examples on the chart, shall we? So I think I'll keep this template here, invert scale back to the initial place. Then let's do a basic. What's this? So let's take the real chart to actually see examples of what I just give. Now this is a bullish expansion. Let's take this break of structure. This is a break of structure. This is our swing low. This is a swing low here, and this right here, let's take this as our swing high. This is our swing high, this is our swing low. Now, if you are lost anywhere in this video, then you have a lot of catching up to do. There are some videos I'll be re-uploading on my channel. I'll drop the link after this video. There are some videos I'll be re-uploading on my channel to actually give you an understanding of what we're talking about. Now, like I said, this is another block. This is another block. Though this other block has already been mitigated, so this other block has actually fulfilled its purpose. But then again, this is also another block. This is another block here. Now, this is one of those other blocks that I said you should avoid. This is one of those other blocks that I said you should avoid. Why? Let's do an analysis on what I just did. You mark out your premium and your discount zone, you bring it all the way up here. Your premium zone up here, your discount zone down here. Now, like I said, when you see a bullish expansion, we expect price to come back down into the discount zone before moving back to the upside. And that was exactly what price did. That was exactly what price did. Now, let me delete this and show you. Some of you might actually want to mark out this other block to actually buy from here. As you can see, price invalidated you. Now, were you correct to mark out your other block? Yes. But like, did price invalidate you? Also, yes. Why? Because we were trying to buy at an immature place. Now, this is also another block. This is also another block. Now, this other block actually flipped the switch. This is also another block that price invalidated. But price came back to this other block as a breaker block and used it to sell down to the downside. But then again, you get the logic. This, in a bullish scenario, you expect price to come back down here and start moving to the upside. But price took it out because it was still in the, let me mark this out very well. Because it was still above here, above this 50% mark. So it was still in the premium zone. It was still where price was expensive. And buys don't hold often in the premium zone. So like, let me look for more examples. Let me look for more examples. And as you can see here, price came back to the discounted order block. To the discounted order block. Price came back to the discounted order block, like, and cleared out all of this liquidity here. Price cleaned all of this liquidity here, all this liquidity here, or you can just mark this out like this. Price cleaned out all this liquidity here. Let me remove this. Price cleaned out all this liquidity here and bought. So the illustration I just gave, the simple illustration I just gave of price coming back into the discount zone and buying off, just played out. But price came to the most discounted area. Now, one of your primary goals when using premium and discounts in your analysis is that you want to buy to maximize your profits. You want to buy at the most discounted price. Now, that does not say you should over refine your entries. That doesn't mean you should actually over refine your, what a clean setup. That doesn't mean you should over refine your entries, but like, you want to make sure you buy at a discounted price or you sell at the highest price. Now, what do I mean by that? As you can see here, this is the peak of this range. This is the highest point of this range, and this is the lowest point of the range. Now, as you can see here, price got here and started rejecting. You saw a rejection candle, price rejected down to the downside, price rejected, created an inducement. This would have been a cleaner setup for the lower time frame, but I don't think we have time to actually explain that. Now, if you are taking a sell from here, if you are taking a sell from here, if you are taking a sell from here, bring this here. If you are taking a sell from here, you'd actually make crazy money. You are taking a sell all the way down here or all the way down anywhere. You have made a lot of money. But like, if you had been scouting for a sell around here, you would have like, you'd have lost probably a lot of money. Because let me just do an illustration and try to sell from here. If you sell from here, it's stop loss. If you had tried to buy from here, if you are trying to buy from here, you also hit stop loss. So put that at the back of your mind that whenever you want to start analysis, check your range, check the most recent range. It's priced in the discount zone or it's priced in the premium zone. That gives you an understanding to actually know, okay, am I looking for a buy or I'm looking for a sell? Now let's go to other examples so we can just familiarize ourselves with the whole concept. There's an example here that played out. There's an example here that played out today. Midnight. Let me clean this. Let me clean this. Let me clean this. All you need for a range is just a break of structure, a swing high, and a swing low. And there goes your range. Now, For this range, we have this break of structure here. This is a break of structure. Market broke to the downside, break of structure. Then we have our highest points, the swing high, and the lowest point, the swing low. Now, let's just mark our premium and discount all over again from the top to the bottom. We expect price to come back into this discount, into this premium zone because we are bearish. Yeah. We expect price to come back into this premium zone because we are bearish. This trend was actually bullish. This trend was bullish. So price comes back down into the discount zone and buys back up. In a bearish scenario, price comes back into the premium zone and sells down. Now, as you can see here, let me go to the 5 minutes. You should see a clearer. As you can see here, price came back to this place. Now, price had already mitigated this other block. This other block had already mitigated, but then it created another one. This is another other block. Now you just mark this other block. You mark this from top to bottom, and you drag this out. And as you can see, price came back and respected this place, and price just continued selling down. Price continued selling down. You can just cover your stop loss here. Now, while price was actually fulfilling all of this, it created another range, which is a break of structure here, break of structure down here. This is a break of structure. The same thing, swing high, swing low. The highest point, the lowest point, and our break of structure. Now, we just have to repeat the same process again. You mark out your premium and discount zone, and you look for sales around here. Now, this is a mitigated other block. Price mitigated this one too. Then again, price came back here. Price came back here and created a new range. So like the cycle just keeps repeating and repeating and repeating itself. The cycle just keeps repeating and repeating and repeating itself. So just go on your charts. I think how many minutes do I have left? Just 3 minutes. I think I should be able to like cite other examples. Let me check for 5 minutes. Uh, should have examples somewhere. Yeah, yes, this is an example. This is a prime example. We have a block of structure here. We have a block of structure here. We have the swing high, the swing low. Then we have premium and discount. Don't forget premium and discount. Now, premium and discount is not a strategy on its own. Disclaimer: premium and discount is not a strategy on its own. It's just to tell you where to buy, where to look for buys, and where to look for sales on any given trend. If you are bearish, if you are bullish, mark out your premium and discount zones. Now, if you are bearish, if the price is going down, you want to look for the most premium place to actually buy from, which is this highest points. Now, price might have mitigated. There's a lot to actually say about that when we get to POIs. Price might have mitigated your POI or your key level, but you want to make sure that you buy from the most favorable place. The higher your POI is in a premium zone, the more RR or the higher RR you actually stand to get. So price just did the same thing here. Came back into the premium zone, tapped into this other block, then started dumping down. Now, if you had tried to actually sell from another block like this, you must have what's it called lost a lot of money. So like that's just the whole thing. Go on your charts, practice. The same thing here. The same thing is repeating itself here. We have a break of structure here, a break of structure here. Um, your premium and discount, and as you can see, price is back into the premium zone and is ready to sell down. So yeah, that will be all for today. Make sure to practice, make good use of this video. Watch. If you don't have if you have questions that you don't understand regarding the video, ask in the comment section. And for more contents like this, give me a follow and join my Telegram channel. See you in the next one. Thank you.